This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, November 4th, 2014. So the euro could be looking for a bit of a bounce after making a fresh 2014 low at 24.40 on Monday. The market has now ended after breaking above Monday's high, a sequence of consecutive daily lower tops, and this does suggest that we see a bit more of a pop before we see a bearish resumption. Ultimately, though, the market is very well capped below the 50-day moving average, which comes in around in the 127.65, 127.75 area, and really only a break above there would compromise the current downtrend, which favors medium-term weakness to the 120 area over the coming days and weeks. Sterling dollar. Cable continues to be confined to a multi-day range trade with 62.27 defining the top of the range. That's the high from the 9th of October, and 58.75 to the downside. That's the 2014 low from the 15th of October. Ultimately, though, given the trend that had preceded this consolidation, the downtrend, the consolidation is classified as a bearish consolidation, with the market eventually seen below 158.75 and towards 155. However, on a short-term basis, Monday's bullish outside day formation does suggest that we could see a bit of a bounce before seeing a resumption of declines. Dollar yen. Dollar yen is taking a bit of a breather on Tuesday following some intense price action, some intense bullish price action following the break of the previous high at 110.10, with the market surging up to fresh 7-year highs at 114.20 thus far. Any setbacks, however, should ultimately be limited to the 110 area, with the market seen trading towards the next key objective at 115. Euro Swiss. Euro Swiss continues to hover just over the 120.45 yearly low from September, and the market looks like it wants to break below, which would expose critical support by the 120 barrier further down. Inability, however, to take out the 120.45 support, that yearly low, would suggest that the market wants to base out and head back towards 121.40, which is that key range high from the 7th of October. Only a break above 121.40, however, would ultimately take the pressure off the downside in Euro Swiss. Aussie dollar. Aussie dollar remains confined to its recent ranges after stalling out just shy of the 2014 low from the 3rd of October at 86.42. Still, the market is classified as a bearish consolidation following an intense move to the downside several weeks back, with the range high defined at 89.11. Ultimately, only a break and close above 89.11 would take the pressure off the top side, with an eventual break seen below 86.42 to a fresh downside extension into the 8400 area. Dollar CAD. Dollar CAD is finally breaking above the previous 2014 high that was set on the 15th of October, with the market now opening the door for the next major upside extension towards 115 over the coming sessions. The break above 1386 on Tuesday confirms the next higher low at 1122, the low from the 29th of October, and any setback should be very well supported ahead of that level in favor of additional gains. Kiwi dollar. Kiwi has broken down below a multi-day range, just breaking below that range on Monday, trading down to 76.98, below the previous yearly low at 77.07 from the 29th of September, and this sets the stage for the next major downside extension towards 74. However, a break and close below 77 would be required to get that going. Until then, the range is intact, but ultimately only above 80.35 would negate current bearish momentum and take the pressure off the downside. SPX 500. The S&P 500 has rallied up to fresh record highs on Monday, with the market showing no signs of let up just yet. Resistance now comes in the form of figures and psychological barriers, with 2040 and 2050 as the next key levels to watch above. A break below 1993, the 31st of October low, would be required to take the immediate pressure off the top side. Gold. Since breaking down below critical multi-month range support at 1180, the market has stalled out in the 1150 area. 1161 is the current low that was set on the 31st of October. That's the yearly low. And the market is putting in a bullish reversal day. It's not shocking to see this bullish reversal day given daily studies, which are currently oversold, and the market could be poised for a bit of a bounce before we see any resumption of declines. Ultimately, only a break back above 1256, that's the high that we saw on the 21st of October, would negate the current down move. Finally, U.S. oil has been under intense pressure over the past several months, with the market collapsing to fresh yearly lows and fresh multi-year lows on Tuesday, taking out the 2012 base at 77.25 and putting sights squarely on the 2011 base, October low, which came in at 74.95. However, with technical studies now on a daily and weekly basis looking quite overextended, look for the market to find some good support around the 7,500, 7,600 area, 75, 76 area ahead of a more significant corrective reversal. That's all for today. Wish everybody a good one and see you back on again tomorrow.